obviously. Thank you very much for joining me. If you haven't seen it, there is a survey open. If you'd be so kind as to answer it and let me know that whether you heard about the webinar, be it from my personal Twitter account, the Global FX Club official Twitter account, or you're a member of the service. That would be wonderful. Please take a moment also when you get a chance to look at the risk disclaimer, which should now be on your screen. If you're watching the recording, please pause the recording and read carefully over the risk disclaimer before we go to the charts. Alright, let us go to the charts. Alright, so it's actually a significant week this week. We have Wednesday is the big day. We have the FOMC rate decision. Certainly at this point everyone's written off the possibility of an October taper. I think correctly. I think there's basically no chance to see anything in October. But the language that comes out of the statement may be somewhat significant, so we'll have to pay attention to that. George, the disclaimer just says, trade within your risk parameters and always trade with risk capital, like every other disclaimer in this business. Also on Wednesday, after the FOMC, we have the New Zealand rate decision as well, all right? And that's going to be a little bit more interesting, I think. FOMC is going to cause its usual shenanigans, but I think it'll be fairly limited as they're going to basically just reiterate the wait-and-see approach. The RBNZ, though, yeah, I don't know. We'll have to see. They're certainly not going to change rates at this point. The question will be how long they think they're going to push off raising rates, or whether or not they're actually going to start suggesting that they may cut again. I had a discussion about this over Twitter last night. I am firmly in the camp that we have seen the end of New Zealand easing. I do not think we'll see another rate cut. But the person I was talking to made some good points that the elevated value of the New Zealand dollar and the fact that other than housing, New Zealand's fairly deflationary means that there could actually be a scope for further rate cuts. I suspect that we'll see them push off rate hikes to try to keep and sort of rely on verbal intervention to try to push the Kiwi a little bit lower. We won't see another cut for a while, and then we'll see a hike before a cut. But we'll see. And this Wednesday's statement will be very, I think, educational as to what exactly they're thinking. We've seen some interviews with Wheeler, the governor of the RBNZ, lately, and he's been saying that they're going to push off rate hikes until 2014. I think that is likely. So we'll see if that's what they reiterate in their statement. So those are the big two events. We also have a bunch of smaller U.S. numbers: retail sales, housing starts, weekly unemployment claims on Thursday, PMI data on Friday. We also have UK PMI on Friday as well. We also have the Bank of Japan Wednesday night to Thursday morning. That's East Coast time. So again, a busy week, fairly significant week, and fortunately for a significant week, we have lots of pairs at significant technical levels. So let's start with the weekly chart of Euro Dollar. This is not something that you should sleep on here. All right, this is the weekly chart of Euro Dollar, and this is a test of the 618% fib of the rally starting in May of 2011 and ending in July of 2012. All right, so from 149.40 basically down to 120.40, we've now touched that 618%, and we may start to see Euro at least consolidate or pull back a little bit from a major weekly level. All right, if we look at the daily chart, it's very aggressively bullish, especially these last 5 days. All right, we pushed higher, but we are right now sitting at a major resistance level that dates back, or well, that draws its significance from a very large time frame. We gapped up slightly, 0.03% here on Euro, so nothing to really get that excited about. If we do start to see a pullback, the first major test is going to be right around this 136.25 area. All right, these previous tops. That is also, I suspect, all right, roughly the 618% fib of this rally from here up to here on the daily chart. All right, so that will be the first major test, and if we rally from there, we could continue to push higher, but that would be the first opportunity bears have to start some momentum down to the downside. All right, so keep your eye on Euro Dollar. Keep your eye just knowing that the context is significant weekly resistance here on this pair. All right, daily chart. Let's go to dollar yen, which has gapped higher today. All right, this is the daily chart of dollar yen. Basically, the drawings speak for themselves. We held this bottom trend line. I am expecting a test of 99, and then I don't know. We'll test the top of this triangle. Let me make sure this triangle is actually correct. Okay, we'll test the top of the triangle, which is about 99, and then from there we could either break out. It offers a very nice long trade for a move back above 103.72, these previous highs, or we could start to fall back. And if we start to fall back, about 97.50 or so is going to be the resistance level. All right, so we started the day very well today, gapping up 1/3%, from about 97.40 to about 97.70, so 30 pips or so to the upside on that gap. If we do fill it, you could look for opportunities to buy there. Keep in mind that we do have some daily moving average resistance here, 5100, sitting right at about 98.20 or so. All right, so that's dollar yen. Let's see, this is the Nikkei, all right, the Japanese stock market, or one of them, I should say, but the one that I pay attention to. It is, unsurprisingly, perhaps trading in a very similar technical pattern as the dollar yen right now. We're just shy of a fairly significant test here of the 100-day EMA and this ascending trend line that has points from August 28th, October 9th, and then this third test would be sometime this week. Alright, so if we do manage to see a test there, you could look for a rally to the upside. And if we break down, the next major test is about 13,800 or so. That would be the trend line dating back from June 6th. Alright, I'm going to delete these trend lines and show you the resistance level that is significant here on the Nikkei. The reason you should care about the Nikkei is because when the Nikkei goes up, yen pairs go up. Alright, not quite universally, but close enough as to be very, very much worth watching. 15,000 is the major level to pay attention to here to the upside on the Nikkei. If we manage to see price rally, let me grab trend line, rally from this level above 15,000, alright, expect to see yen pairs, including dollar yen, squeeze very much to the upside. On the other hand, if we do manage to break down, look for the yen to strengthen and dollar yen to fall along with the rest of the yen pairs. Some of the other yen pairs, CAD yen, again, similar to dollar yen, respecting the bottom of its trend line. Euro yen is a little bit untradeable here to me. Okay, basically, as long as we're trading somewhere above that trend line and below this trend line, you could just play the range, buy it down here, sell it up here, and hope for the best. Kiwi yen may actually provide a nice buying opportunity this week. Alright, one of the Kiwi pairs that you should definitely be keeping an eye on with the RBNZ on Wednesday. A dip down to 80, called 80, would be a very nice buying opportunity. 100-day EMA, this previous swing low here. Alright, this is a potential double top, so don't sleep on that. But if you get in pretty close to 80, your risk is very low, and you have the potential for a move up to 82, 83 before another move lower. Alright, so I would very much be keeping my eye on Kiwi yen. Also would be keeping an eye on Kiwi dollar as well. Alright, similar idea here. Potential head and shoulders being formed. The neckline right now would be about 82.30, so if we see a sell-off down to there, you could try to buy a bounce up to about 83.50 and then sell into a strong move down towards 80. That's a potential, again, with the RBNZ. Kiwi pair should really be on your radar. Another Kiwi pair, Euro Kiwi, alright. We're above this 50% fib. Speaking of key fibs, a move up to that 618 is about 167.80. That could provide a nice opportunity to try to fade some Euro Kiwi strength. And so there's a bullish Kiwi setup for you. So that's another one to sort of keep your eye on early in the week. These would all be trades that ideally you get in before the RBNZ. You get your stops very close to break even or in the money, and then you hope that the RBNZ does whatever it is your setup wants it to do. Alright, so if you're short Euro Kiwi, let's say we rally here early in the week, you fade it right near 168, then you're hoping that the RBNZ comes out hawkish and you take some profits. If they come out dovish, you try to get stopped out as close to break even as possible. All right. Other pairs to look at. Let's look at E-minis real quick. E-minis is another one that requires a weekly chart. Alright, so this is, I have to say, this is the maybe third or fourth iteration of this ascending wedge that I've had to draw. Okay, John, I'll look at Aussie yen in a second. I skipped it because I have nothing on it, but I'll show you what I think in a second. This is maybe the third or fourth iteration of this wedge that I've had to draw, but it remains technically valid as we make new highs here on E-minis. Opened up 1/100th of a point percent lower so far to this week. We are testing the top of that wedge. All right, if we get some sort of fundamental catalyst, I would think a breakdown to first about 1680, and then below there probably about 1600 could be in the offing. But, I mean, shorting E-minis here is a little bit of a risky proposition considering the way that they have just trucked higher. 3 very strong weekly bullish candles here, but note the resistance and just sort of keep that in mind going forward. Alright, Aussie yen, then pound Aussie, no problem. Alright, Aussie yen. Aussie yen was really clean for a while, now it's not anymore, and that's a little bit irritating. Alright, so here's the breakout point on Aussie yen. Alright, we broke out nicely, we retested, then we broke out again from here. Now we're pushing higher. This 92 area is very significant. I would be watching that very carefully. Alright, as we drift, if we drift down towards that area for a potential buy. But right now, I mean, this candle here scares me. Alright. If it's not exactly a bearish engulfing, which I don't think it is, yeah, yes, that candle before it is slightly higher. The point's still the same, and it's an extraordinarily strong bearish candle here, and it would not be surprising to see it sort of follow through a little bit lower before a bounce. But 92 would be the level, really 92.40 to 92 would be the level to watch on Aussie yen. But I think there are other yen pairs that are a lot cleaner, so I will probably be avoiding Aussie yen this week. Pound Aussie. Okay, very nice rejection here, the 50-day EMA. Continuing a little bit so far this week, at the open anyway. Okay, it's also the 38.2% fib, so keep that in mind. What held was this 100-day EMA, and it held very well. It held 1, 2, 3, 4, 5, 6, 7 tests, all right, before pushing higher. So it would not surprise me to see it hold again if we do drift down here. We may see the pair consolidate a little bit between this 50 and 100, okay, before finally picking a direction. And when it does pick a direction, all right, it's going to pick it very strongly. Targets and support to the downside about 162.85. That is the 200-day EMA. To the upside, all right, you just basically have to watch this 173.50 area, those previous highs connected by that trend line. So I don't have a setup on pound Aussie right now, but I'd be looking to buy close to this 100-day and sell close to this 50, and then see how it plays from there. Euro pound, all right, I'm looking for a move up towards 86.15. Alright, basically kind of an ABCD type idea. These are equidistant lines, these blue lines here. The measured move, if we count this as an ABCD, it pushes up towards here, which would also end us very nicely at a 618% fib. Okay, slightly above, but generally 86 is the level to keep an eye on. It's about 60 pips to the upside. So, I mean, if you can find a short-term setup, might be worth keeping that target in mind on Euro Pound. Dollar Swiss, all right, is another one I think you should have your eyes on this week. This is the weekly chart of dollar Swiss franc. We are at the bottom of this significant range that has lasted since really, I mean, we made it on the 20th of February 2012. We bounced a little bit to end the week. If you look at the daily chart again, 2 long-legged dojis, all right, Thursday and Friday. If not necessarily reversal candles, certainly suggests a little bit of hesitation and the potential for this pair to start to turn a little bit higher. All right, if dollar Swiss rallies, that usually corresponds with a euro dollar decline. Again, remember where euro dollar is sitting right now, so there is the potential for those two to line up nicely. Dollar Swiss to move higher, euro yen to move lower. I see we have a couple new people in the room. If you get a chance, I would very much appreciate you taking the survey and just telling me where you heard about the webinar. If you get a chance, thank you very much. Okay, so I like dollar Swiss to the upside this week. I actually have some weekly calls on this pair I bought right at the close of last week, just betting that dollar Swiss will finish basically above its opening price this week. So I am looking for dollar Swiss to push up into this trend line here, about 90.35 or so, at least. So it's about 110 pips, so I'd be keeping my eye on dollar Swiss. All right, Aussie dollar. I don't think I've done Aussie dollar, have I? Aussie dollar. Okay, another pair at a significant technical level. It actually hit that significant technical level the middle of last week, but whatever, it's still worth noting. We tested the 50% fib, all right, from the decline from basically this high here, which was April 11th of this year, down to the low of 88.47 that we touched back in August 5th. All right, so we tested that 50% fib. We rejected it, actually, with this very strong, this is a bearish engulfing candle, here on the 23rd of this month, and we started to push lower from there. So definitely that's something to keep in mind here when you're looking at Aussie and you're looking at other Aussie crosses. This is what we're dealing with here on Aussie dollar. We are testing this support area very well, so I would be keeping a very close eye on that. All right, any other pairs I should be taking a look at? Euro Aussie actually is another good one here. All right, so Euro Aussie, next resistance level 144.70. All right, support is down here. I am not confused. I am uncertain about Euro Aussie right now. From a fundamental perspective, I have to like it to the downside. That's assuming neutral risk trends. But if we do get that S&P 500 sell-off, if we do start to see the Nikkei break lower, we could see this really accelerate to the upside. But major resistance 144.50, major support 141 basically. So watch those levels very carefully. Scandinavian pairs, sure. I actually meant to cover SEK, I forgot. All right, dollar Swedish krona. This is the one pair that makes me a little bit nervous about dollar strength this week. We sold off ugly on Friday, and it looks like there's momentum for it to push lower here to these previous lows around 627. All right, those lows are made basically right around February of this year. From there, we may see a bounce, and again, then if we do see a bounce, this trend line is going to be significant. All right. I haven't looked at the Norwegian guy yet. Let's take a look at what the Norwegian kroner is doing. It's been doing whatever this is forever, I think. You basically draw the triangle like that. You can actually draw this as well if you so choose, ignoring this wick. The good news is that the upside of this triangle is very well defined. So if we do see a rally and a breakout, I would be very comfortable buying it. But in terms of picking up support levels, a little less confident here. 585 could be a nice support level. All right. The major one would be really more close to 5.8, 5.78. So those would be the two levels I'd watch. We are sitting right here, right on the 200-day EMA. All right, we wicked below it on Friday, but could not close below it, which sometimes actually sparks a very nice reversal. I don't see an example of that on this pair right now. Well, I mean, you can see it a little bit here on this candle. We wicked above the 100-day and touched the 200-day, couldn't close it, and then sold off from there. Could be seeing the opposite effect here. But if that is the case, I would wait to buy it until we're about 592 and we clear these previous this previous congestion area. I can also, I mean, look at the Danish krone if you want, but that's pegged to the euro, so it just does whatever the euro does, but backwards. So it's probably at a major 6.8% fib. Dollar CAD, which is not a Scandinavian country. Okay, that's 105, looks, I wouldn't say inevitable, but highly likely. And then from 105, it's time for everyone's favorite question mark. I don't know. Similar to dollar yen, expecting a rally to 105 on dollar CAD, and then from there, you got me. All right, we could turn lower. We could turn lower and continue trading in this triangle, and if so, that would be great because this is a fairly big triangle. So you'd sell around 105 looking for about 103, so about, call it 150 pips if you want to be a little bit conservative, and then you can buy here up for another about 100 pips. So that is a distinct possibility, one that would actually provide some very attractive range trading opportunities. Or we could see a breakout, and that would also be an attractive opportunity. Keep in mind the larger picture here for dollar CAD. This is the monthly chart. If you've only been trading Forex since, you know, call it, even just like call it at the end of the financial crisis, all right? So 2010, late 2009, you've been dealing with a 110 to 94 range on dollar CAD. This pair used to trade at 140, all right? So it would not be unusual to see some very significant upside here on dollar CAD, or rather, it would not be making new highs or anything. So, you know, we are trading near the bottom of the range for this pair, and if we do see a breakout, you could start to see dollar CAD start to run. There is some fundamental support for that. The Bank of Canada remains neutral and sort of bleh on the Canadian economy. And the Fed remains a little bit more buoyant on the U.S. economy, though that has taken a bit of a hit lately. The other fundamental consideration on dollar CAD, the thing that makes me very much macro bullish on this pair, is the increased oil exports that the U.S. or the increased oil production the U.S. is going to see over the next 10 years. As fracking and all those other advanced techniques kick in, that will reduce our dependence on Canadian oil and probably do damage to the Canadian dollar. So this pair, I mean, obviously you're probably not here looking for a trade that has you buy dollar CAD at 104 looking for 140, but I wouldn't be surprised in the next even 5 to 10 years if that's where we start to see this pair trade. So keep your eye on dollar CAD. 105 is the major level right now for this relevance of trading. Alright, other questions or requests? Pairs I may have missed. Aussie Kiwi, if you want to see it. I hate it. But I hate it, but I'm very much bullish. Aussie Kiwi. Alright. I don't have a particular setup, but just macro, I look for it for about 120. So about 400 pips. So if you can find a setup there, that would be great. Pound CAD is another one that I remain macro bullish. Okay, so look for pullbacks to buy Pound CAD. I certainly will be. I would love to see. I haven't actually looked at Pound Dollar yet. I gotta do that. Pound Dollar's next. Pound CAD. All right, I'd love to see it down to a little bit below 168 for an opportunity to get long. Aussie CAD, sure thing. All right, so this is Pound Dollar. Potential double top forming here around 162.60. We are testing this ascending trend line support. Very possible we see it move back down to 159 again, and then from there another question mark. We either bounce and it turns into a flag, or we break down and it turns into a double top. So there is definitely a scenario for a Pound Dollar pullback this week. It bears very much watching. Very much bears watching is actually the correct syntax there. Potential head and shoulders pattern as well on hourly 4 hour. marking that second top. Aussie CAD is a disaster. Very nice, beautiful rally. If you've been a part of it, I have been staring at it forever and never managing to buy it, but such is life. 101.25 is the 618% fib. I feel that it would be difficult for us. I don't think it'd be difficult for us to get there. I would be surprised if we didn't manage to see it push up to there before potentially correcting. The nice thing right now is that this sharp ascending trend line is running very nicely with this 50-period EMA here on the 4-hour chart. So if we see a 4-hour close below that trend line and below that moving average, I would probably look to escape any longs and perhaps even initiate some shorts. 41% members. Some of you have seen from my personal Twitter feed. I think one person got an email. One guy from @GlobalFX Club. Interesting. Not the breakdown I would have expected. All right. Any other requests, pairs that you would like me to cover? I can show you KiwiCAD. It's a mess. KiwiCAD has started its breakdown already. That's another reason I would maybe look to be a little bit hesitant about Aussie CAD. All right, we're below this trend line. We're below the 100-day EMA. So very possible we've seen the beginning of a move on KiwiCAD down to about 85.76. So bear that in mind. Although I think we gapped a little bit higher. Yeah, we gapped up a little bit. We're back above that 100-day, but same general idea on KiwiCAD. CAD Swiss broke down, sold off hard, very aggressively in towards 85. Okay, I don't know what you do with CAD Swiss here other than wish that you were shorted up here at 88, because this is a very impressive sell-off. The other Swiss pair, and God knows I have not liked this pair since, I don't know, 2008 basically. But this is Euro Swiss. The pair that the Swiss National Bank watches. You couldn't pay me to short it, but you might be able to start convincing me to buy it. I'm not happy about that prospect, but I am thinking about it. I would be intrigued to buy it above this trend line here. All right, that's about, call it 123.80 for a move up towards 126.40 or so, both these previous highs. So this is a pair that doesn't move a ton, but it is starting to set up to be a little bit more bullish. And you always will have the S&B behind you, which is never a bad thing. Okay, other requests. Euro yen, sure thing. This is gold, and I'm also bullish gold. Okay, very nice wedge breakout here. We've gotten some good follow through. I do like gold to test its 200-day at about 14.17, so keep that in mind. Pound Aussie and Euro yen. Let's do Pound Aussie. Pound Aussie again. All right, basically right now I think it's stuck between these moving averages. I would not be surprised to see it break up. I would be a little bit more surprised to see it break down, but again, not stunned. A daily close above the 50-day or below the 100-day would be a trigger for a trade for me to the upside, to the downside. Looking for 173 to the upside and looking for 163 basically to the downside. Both pound dollar and Aussie dollar are set up to pull back a little bit this week, so kind of a neutral cross trades, so we'll have to see what risk trends decide to do. Euro yen stuck in a wedge. All right. We gapped higher. The euro in general, all right, looks a little bit overdone against the dollar. So we could see a euro yen pullback here. If we do see the euro yen pullback, 132.60 to 132.25 is the major support. On the upside, 136 is the major resistance. Other pairs. If you trade oil, it very nicely held a 618% fib. Which fib? Sold off heavily, which is actually pretty interesting. I'm not exactly sure what sparked that. There, we held the 61.8% fib from the April to August rally. All right, very nice rejection candle here. Very possible we see this pair march a little bit higher now. Or sorry, this commodity to march a little bit higher now. So keep your eye on oil. I don't trade it. It does tend to affect CAD a little bit, although that correlation has kind of gone by the wayside a little bit lately. All right, other requests. See if I missed any major news statements. Oh, right. So on Wednesday this week, we have ADP non-farm payrolls for the U.S. All right, we don't have the official government numbers this Friday. But we do have the ADP numbers, so look for people to start to put a lot of stock in that as well. And then we have, of course, the ISM numbers and consumer confidence numbers out of the U.S. that will also be paid attention to, especially with in conjunction with the FOMC decision. Okay, any other requests, pairs, things you'd like me to take a look at, questions, etc.? Alright, sounds good. Thank you very much for joining me, guys. I appreciate it. If you have any weekend left, please try to enjoy it. If you don't have any weekend left, welcome to the week. You guys know where to find me. This is my Twitter handle. By all means, feel free to ask me any questions or send me any thoughts that you have during the week. I'll be happy to talk with you there. Or you can always come on over to globalfxclub.com, and we'll be happy to talk to you there as well. So, alright, enjoy your week, you guys. Thanks for joining me. I will be posting the recording as soon as I can get it encoded and uploaded. So if you want to rewatch some of the sections, you can absolutely do that. So have a great week, guys. I'll talk to you soon.